In 2026, the investment world is changing faster than ever. New technologies, shifting markets, and global trends are creating fresh opportunities for those who know where to look. While some traditional investments are slowing down, others are gaining massive attention and momentum. But which ones actually matter right now? Today, we will talk about top 5 investments that are trending right now, 2026 guide. So before we get started, make sure to hit that like button, also subscribe to my channel. But here's the key point most people miss. Investing in 2026 is not about chasing hype. It is about understanding long-term structural changes in the global economy. Stay until the end, because the final investment trend is not just growing, it is quietly reshaping how ownership and wealth will work in the future. 5. Real estate and REITs, steady wealth in an unstable economy. Real estate continues to be one of the most reliable ways to build wealth, especially in uncertain economic conditions. But in 2026, the way people invest in real estate is changing. Instead of only buying physical property, more investors are exploring REITs, real estate investment trusts, which allow people to invest in property markets without directly owning buildings. This shift is important because real estate has always been considered a stable asset, but traditional ownership requires large capital, maintenance, and long-term commitment. REITs remove many of those barriers and make real estate more accessible. The reason real estate remains strong in 2026 is simple. People will always need space to live, work, and receive healthcare. And housing demand continues in growing cities, and commercial real estate still supports global business activity. Another important factor is inflation protection. When prices rise, real estate often adjusts upward over time, helping investors preserve value. At the same time, certain segments like healthcare facilities, logistics warehouses, and rental housing are gaining more attention because they align with long-term demographic and economic trends. Real estate is not about fast profits. It is about long-term stability, predictable income, and protecting wealth during uncertain times. 4. Digital assets and cryptocurrency. From speculation to infrastructure. Cryptocurrency has evolved significantly from its early days of speculation and rapid price swings. In 2026, digital assets are becoming part of a broader financial system rather than a separate experiment. Bitcoin, Ethereum, stablecoins, and tokenized assets are increasingly being integrated into institutional portfolios, financial platforms, and global payment systems. One of the biggest changes is institutional adoption. Large financial institutions are no longer ignoring crypto, they are building infrastructure around it. This includes custody solutions, regulated investment products, and blockchain-based financial services. Another major development is tokenization, which allows real-world assets like real estate, bonds, and even private equity to be converted into digital tokens. These tokens can be divided, traded, and transferred more efficiently than traditional ownership structures. This makes investing more flexible and accessible. Stablecoins are also becoming more important because they provide a bridge between traditional money and digital systems. They allow faster transactions and global movement of value without relying on traditional banking delays. However, crypto remains a high volatility asset class. It is not guaranteed or stable, but it is increasingly becoming part of long-term financial infrastructure rather than short-term speculation. 3. Artificial intelligence stocks, the global productivity engine. If there is one trend that defines modern investing, it is artificial intelligence. AI is not just one sector, it is a force that affects nearly every industry. From healthcare to finance, education to manufacturing, logistics to entertainment, AI is reshaping how work is done. This is why AI-related investments continue to attract massive attention in 2026. Companies involved in AI infrastructure, including chip manufacturing, cloud computing, data centers, and machine learning platforms, are seeing strong global demand. The reason is simple. AI increases productivity. Businesses can automate tasks, reduce costs, improve decision-making, and scale faster than ever before. This creates a cycle where companies that adopt AI grow faster, and companies that build AI infrastructure benefit from that demand. But AI investing is not just about one or two companies. Now, it is about an entire ecosystem. Semiconductor manufacturers powering AI chips, cloud platforms running AI models, software companies integrating AI tools, robotics and automation companies replacing manual processes. This trend is long-term because AI is not a temporary innovation. It is becoming part of how the global economy operates. Still, like all growth sectors, it requires understanding and caution. Not every AI-related company will succeed, but the overall direction of the industry remains strong. 2. Infrastructure and energy, the hidden foundation of growth. While technology and AI often get most of the attention, infrastructure and energy are quietly becoming some of the most important investment areas in 2026. The reason is simple. Every digital system depends on physical systems. AI models, cloud computing platforms, data centers, and global communication networks all require massive amounts of electricity, hardware, and infrastructure. This is creating increased demand for energy production and power grids, renewable energy systems, data center, construction and cooling systems, semiconductor manufacturing facilities, transportation and logistics networks. Energy is becoming especially important because AI and digital systems consume significantly more power than traditional computing systems. At the same time, governments and corporations are investing heavily in modernizing infrastructure to support digital expansion. Infrastructure investments tend to be slower moving, but highly stable. They are not driven by hype or speculation, but by real-world demand. This makes them attractive for long-term investors who prefer stability over volatility. In uncertain economic environments, infrastructure often acts as a foundation that supports all other sectors. 1. AI plus private markets plus tokenization, the new wealth system. The most important investment trend in 2026 is not a single asset class. It is the combination of multiple systems, changing how wealth is created and accessed. At the center of this shift are three major forces: artificial intelligence, private markets, tokenization of assets. Private markets include private equity, venture capital, private credit, and alternative investments that are not traded on public exchanges. These markets are growing because investors are looking for opportunities beyond traditional stocks and bonds. At the same time, tokenization is transforming ownership itself. Assets that were once difficult to divide or trade can now be broken into digital units and accessed more easily. This includes real estate, private businesses, infrastructure projects, and financial instruments. When combined with AI, this creates a powerful system where AI helps identify opportunities and manage risk. Private markets provide access to high-growth investments. Tokenization increases accessibility and liquidity. This is important because it changes one of the oldest limitations in investing: entry barriers. In the past, many high-value investments were only available to institutions or wealthy investors, but digital systems are gradually lowering those barriers. This does not mean investing becomes risk-free. It means access becomes wider, faster, and more flexible. This combination of AI, private capital, and tokenized assets is not just a trend, it is a structural change in global finance. The biggest mistake in investing is focusing only on short-term price movements instead of long-term direction. In 2026, the strongest investment opportunities are not random. They are connected to global shifts in technology, energy, infrastructure, and financial systems. What do you think of our video? Let me know in the comments section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.